Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, December 13th, a mixed day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn continuing to inch higher, closing above 360, closing at 361 with a half-cent gain. Beans was off 3 cents, extending yesterday's 7-cent loss, and wheat in Chicago was up a penny and a quarter. News today was pretty light. Some of the things that were driving the bus today, if you will, although the bus didn't move very far. First of all, in China, there's news that 3 to 5 soybean plants are going to be shut down there for what looks to be about a week or so as they deal with smog emissions issues. They basically had some pollution issues that are causing those plants to be shut down. It's not expected to be a long time, but nonetheless, in the time when China is really craving more soybean meal to feed their livestock industry, it comes at sort of bad timing. On the other side of the spectrum, when we look at South America, weather in Argentina looks very, very favorable. We'll talk about that here in a minute. Also, looking ahead to tomorrow, Fed policymakers are meeting today and will wrap up tomorrow and announce what is likely to be the second interest rate hike of 2016. But traders will be more in tune with what the Fed says about their expectations going forward to see how likely it is the interest rates will continue to rise. Other news, ethanol continues to be strong. We saw a big move up yesterday. That is helping to support the corn market a little bit. Although in corn trading, we did get up to that sort of overhead resistance of 364 before backing down to 361. So I think it's going to be hard pressed to sort of clear that hurdle as we go forward. Let's take a look at the Argentina soybean map, or the Argentina weather maps going out the next few weeks. And really, the market is looking at what is a rain event that is expected to start this weekend. We got a little bit of moisture last weekend, a little bit of moisture overnight here, but really big rains are expected to start on Sunday and last for a good part of 10 days. And so when we look at the 10 to 20 day forecast, big rains are expected to start on Sunday, continue for 6 days. If we look at the accumulation totals over about 11-day period, in some cases, it's as much as 10 inches in some of these dark orange areas here, and as light as 4 to 5 inches. But nonetheless, central Argentina has been fairly dry, and with this rain event, what has been sort of dry or droughty conditions in 40% of the growing region of Argentina is expected to shrink substantially. Now, keep in mind, this is getting to be game-changing time when we get, if we do get this rain event and we do see, what looks to be fairly good weather outlook going forward, then that may be the nail in the coffin in the bean market. Keep in mind, Brazil is already having what seems to be nearly ideal growing conditions. They've pretty much planted all of their soybean crop there. Weather conditions have been very favorable to start the growing season. In fact, they got off to such a good start. They're expecting beans in Mato Grosso to be start to be harvested in late January. So that potentially is certainly problematic. The other thing, farmers in Argentina have been sort of holding back on sales in anticipation of better moisture. And so if we see this rain event, not only does it spell problems for bigger production potential in South America, but it also likely starts to open the floodgates for farmer selling in that part of the world, which has been a little bit light in some sense. So with that in mind, keep in mind, here in the U.S., we have, January coming, and January tends to be a very sort of robust time for farmer selling. I wouldn't be surprised, in particular this year, to see very, very aggressive corn sales, because I think farmers, for the most part, have held tight to old crop corn, choosing to take it off the combine, put it in the bin, and lock the door. On the other hand, they were fairly aggressive about selling beans with the big run-up we had in beans after harvest. So I think farmers are going to be faced with some tough economic choices come January 1st, and I think the culprit's going to be more aggressive sales, especially in corn as we get into the start of the new year. So if you're a producer, I think it's time to sort of be ahead of the curve here a little bit, because the weather in Argentina is shaping up to be very ideal, and then you've got the impending change in the calendar, which certainly triggers sales here in the U.S. Looking at November beans here, keep in mind that we are $1 a bushel over where we were this time last year on November 16 beans. So, looking at November 17 beans, it is still not far from the highs that we've seen on this contract. Today closing around 1020. The low or this sort of intermediate support resistance area that we've defined as 1008, I think is critical. We've been able to hold above that here for the better part of 2 to 3 weeks. But I think if the weather really starts to materialize like the forecasters say, we have the potential to start to trade below that and start to move sharply lower going into 2017. So I think it's really time for farmers to start taking some action, maybe looking at protecting some of these prices, especially in beans, with U.S. plantings expected to be anywhere from 3 to 5 million acres more in 2017. That's all we've got for today. As always, if you'd like to learn how we can help you in your own grain marketing situation, visit us online.